And happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 1st, and wanted to talk about what the recent market action is that's been going on in the markets, what's been moving markets, what's caused them to move in the last week, and then wanted to talk a little bit at the end about the impact that elections have on stock markets and the volatility surrounding elections and what the impact is, give some real life examples and some things that you can apply to your own portfolio and how to navigate through these times as we're moving into the peak of election season. So we finished the week last week on the S&P 500. For the fourth straight week, we were down in the market. The S&P 500 finishing down lower only by about 70 basis points or so, outperforming much of Europe, outperforming much of emerging markets, as well as the small and mid cap. So last week, the best place to be was in your large names, but it was in the large cyclical names was the place to be last week. And one of the things that's been very fascinating is we talked about growth leading the way. We've talked about the rotation to value, and just to kind of drive that home, over the past 30 days, the materials section of the S&P 500 has actually outperformed the tech sector, which was our leadership before, and material would be a cyclical value oriented company. So just or companies, and that just helps drive home that fact that we may be seeing that cyclical rotation that we've called about, and moving forward, broadening out in the market, and should be beneficial. So diversification is key moving forward here, moving into some of these cyclical names and investing in those ahead of the economic reopening from COVID. And this week we saw a nice big bounce back Monday. Tuesday, we saw the markets kind of flat and a little bit choppy day of trading ahead of the debate Tuesday night. Then the debate happened, and then we saw the futures kind of fall down. We were down 200 points on the Dow heading into Wednesday, and it looked like it was going to be an ugly day of trading on Wednesday. However, what really got the markets turned around and moving were to overshadow the debate was we got some headline of ADP unemployment, which was way higher than expected. So private jobs were higher than expected. We got Chicago PMI, which is a manufacturing index that measures manufacturing output, and it was well ahead of the estimation, which is a great positive sign for the economy. So the markets were able to shrug off the debates and the volatility surrounding the upcoming election and really focus on the economic data, as well as headlines emerged that Speaker of the House Nancy Pelosi and Secretary of the Treasury Steven Mnuchin were back negotiating a possible stimulus deal, a fifth version of stimulus, and that has investors very optimistic moving forward. Now we are in right now the heat of the election season, and I've had a lot of people come up to me and say, Scott, what do we do? Should we sit on the sidelines? Should we move to cash? Is if one candidate wins versus the other, is the market going to fall apart? Is it going to be the end of it? So I wanted to take just a minute or so to talk about that and remind everybody the volatility around elections is very short-lived. It is a blip on the radar screen. It may seem very monumental, it may seem very big, but going back, we can just look back just to 2016, the night that President Donald Trump was elected. The market futures were down very much, and you saw a sell-off on President Donald Trump winning. However, the rest of the year of 2016, November and December, were really strong months in the market. The markets are going to have a reaction to who the president is one way or the other, but it is a very short-lived blip. And then that gives investors and companies times to understand who the administration coming in or staying in power is going to be, what their policies are, and then they are able to adapt and move very quickly to accommodate whichever policies are there. Companies will always find ways to make money and improve on their bottom lines, and that's what the market is looking for. The other thing to consider still is there's still $4.5 trillion of cash sitting on the sidelines waiting to come into this market to move markets higher. So when you see a volatility blip on an election headline, look at it as a buying opportunity, because history has told us that it is a very short-lived event. So take advantage of that opportunity. And if you have questions about how to navigate your portfolio moving through election season and moving forward past that, or how to navigate this transition from growth to value, call us. We're really easy to talk to. You can reach us at 904 346 3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much for watching.